Hi Tribe, welcome back. Ke nna Mapalomaku, and today I want to talk about tax-free savings accounts. You know what? I think so much has been said about tax-free savings accounts, and yet there's so many people who still don't know what the hell they are. So in this episode, I just want to demystify what they are, and hopefully by the end of the video you can open yourself a tax-free savings account. But I think let's just take it back a little bit. The name tax-free savings account, I think it's so misleading, and maybe that's why people are kind of like, a bank account that I can just open, what is it, so yeah, it's actually an investment that you make. I know banks have them, nothing wrong with them, but if you are investing for the long term, again guys, I always want you guys to differentiate, is this a saving or is this an investment? Saving, short term; investment, long term. And the beauty about tax-free savings accounts, or a tax-free savings, tax-free investment rather, as I want to call it, a tax-free investment account, is that you invest your money, you put money away on a month-to-month basis, and interest on interest and interest, compound interest, and if you do it for the long term. So the maximum that you can contribute to a tax-free savings account or a tax-free savings investment is 2,750 Rand per month. That's the limit. That's the maximum that you can contribute. If you contribute more, you'll get taxed, which doesn't make sense. So you can contribute 2,750 Rand on a month-to-month basis, or you can choose to contribute 33,000 for the entire year, just a once-off lump sum, or 10, 10, 10, and 3,000 in between. It doesn't matter, but as long as in one full year you contribute 33,000. I think what people don't get about tax-free savings or tax-free investments accounts is that, number one, they are an investment, so it's better to do it for the long term. So I remember I did an interview, I think it was on Metro, and they were like, no, but you're getting such little interest on this tax-free savings accounts, why must I invest in it, and blah blah blah. And for me, it really just showed me how little we understand investments. Because people take investments and savings as one thing, and it's not. With it, savings, you have a fixed amount that you say, okay, I'm going to deposit into my bank, and the bank tells you, okay, we are going to give you back 8%, 7%, 6%, whatever the case is. Some even now giving you 9%. So it's fixed. You know exactly what you're getting. With investments, on the other hand, whether it's unit trusts, whether it's exchange traded funds, whether it's your Nadi tax-free savings accounts with asset managers, whether it's shares, no one can tell you fully at the end you will have received 10%. It's literally compound interest on compound interest that you earn over a period of time. That slogan of making your money work for you, that's actually when you start seeing money work for you. I think that's the most important thing. If you can differentiate between savings and investments, trust me, you are ahead already. So if you're investing for the long term, you know that maybe there'll be some losses in the short term, but you know that over a period of time, 5, 10, 15 years, it makes a big difference. And it kind of makes me think about, I think there's a quote or saying, one of these things, man, that are flying. I think maybe I read it somewhere. It says that we overestimate what we can achieve within a year, and we underestimate what we can achieve in 10, 15 years. Really meaning that most of the time we think, oh no, I'm just gonna put my money in this investment and boom, I'm just gonna make millions overnight. So we're overestimating what we can achieve in a year, but we fail to look at 10 years, 15 years, 20 years periods. But I think it's kind of our culture now that we want we want things to be done very quickly. But investments really don't work like that. You have to do the long-term type of thinking when it comes to investing. So for me, with tax-free savings accounts, I think they are really perfect because you don't pay any tax at all. I mean, everything you pay SARS. Like, there's nothing, I can't think of anything that you don't pay SARS. It pains me, okay? With tax-free savings accounts or investments, on the other hand, it's saying whatever money you invest. So for example, if you were to invest the maximum, that 2,750 bucks per month, for a period of 15 years, you would have saved, I think, 495,000 or so. Maths is sometimes not fantastic. I'm not good with it, but I think you would have invested just almost 500,000 in the 15 years. So with tax-free savings account, so if your money in that period of time, it keeps on doubling because of compound interest, it keeps on growing because of compound interest. So let's say in 15 years, you earned an interest of 10% over and over and over again, compound interest. In year 15, if you had an interest rate of 10%, you could have just over 1.1 million rand, guys. And that money is tax-free. You're not going to pay nothing to the tax man. I mean, if that's not brilliant, I don't know what is. For me, anytime when I don't need to pay the tax man, I do pay my taxes though. I think it's a good opportunity. So do it for your child's education. Do it for maybe to supplement your retirement. So if you have a retirement annuity already, or you have a pension or provident fund, do a tax-free savings account for yourself, because it's tax-free, but also you can access it, unlike a retirement annuity, which you don't want to do because you're saving for retirement. But I really think just consider having a tax-free savings account, tax-free savings investment, and it's not just with your bank. It's you can go to an asset manager, have it with them, and make the investment a little bit more aggressive than just your bank account. But again, long term, if you can understand that, like I said, you are way ahead. Your understanding of investments, you can even stay for the long term, because a lot of people will invest and be like, oh no, it's not doing well, so I'm just gonna change, and you lose out by doing that. So tax-free savings account, tax-free savings investments / as I call them, I think it's a good opportunity, especially if you are just starting out with this whole investing thing. I think it's very important. Think about them, consider them, and again, they must be low cost investments. It means that your returns are much higher. So shop around and look at all those things that they, don't just sign on the dotted line. I always say, make sure that your money is going to work for you, not the financial advisor, not the financial institution, but for you. So don't be afraid to ask questions if you're sitting in front of your financial advisor or salesperson or whoever is sitting in front of you, to say, what does this mean? Just interrogate. It's your money, so you have every right to interrogate what the hell all those things mean. All right, until then, guys, I hope you have made tax-free savings investments, tax-free savings accounts a bit easier. I hope you understand them a little bit more. Tell me if you have invested in one. Do you know the costs? That sort of thing. But yeah, I encourage you to go out and get one for yourself. And you can contribute a minimum 500 bucks, or the maximum, that's 2,750 bucks. It's very flexible. There's no penalties when you stop, when you start. Those are some of the things that I love about those type of investments. So yeah, I enjoyed this. I hope you enjoyed it too. Please remember to subscribe so you can see all the upcoming videos when I'm sharing my thoughts on personal finance. Cheers, guys.